Hey, this is Mitchell with Option Wolf. Today we're going to be going over Options 101. It's going to be a very brief video. We're beginning into some more detail in our other videos. Basically, a lot of people out there want to learn how to trade options but don't really have any idea where to start. So today we're going to be going over again briefly what an option is. So let's just dive right in here. What is an option contract? It's the right to buy or sell an underlying stock at a specific price by a specific date. So it's a zero-sum game. Really, anybody can do it as long as you know what you're doing here, and we'll provide the tools necessary to figure that out. So, like I said, anyone from a proprietary trader to a high school dropout can make money. But how do options differ from stock? You got leverage, time, expiration, exponential gain or loss, and return on investment, and they all kind of tie in together. Leverage, essentially you can put up less money to make just as much as you would on a stock if somebody's putting up hundreds of thousands of dollars. Probably the biggest factor with options is going to be time. There's an expiration date on every contract. You can't hold it forever like a stock and hope that it turns around. So that allows you to create these speculative plays and make more money. So basically you're capitalizing on time, which allows you to get an exponential gain or loss and a higher return on investment. So why should you trade options? Again, leverage is a huge thing. You can come in with the $5,000 account and double your money in one day. Granted, that's going to be a higher risk, but you can do it. I've done it myself. Hedging, you can use hedging strategies, and there's a lot that we'll go over in our other videos. If you have an existing portfolio, you can buy, sell options. Again, multitude of strategies there. Speculation kind of ties in with day trading and competitive landscape. You could trade options all day and make money versus putting $20,000 in a stock and hoping that you make $100 for the day. You can put $2,000 in an option and hope you make $1,000. So pricing, price of the underlying stock, implied volatility, time, and Greeks. There's a formula to this called Black-Scholes that we'll cover in another video with the Greeks. But the main things that are going to affect the pricing of options contracts are going to be the price of the underlying stock, the time, and implied volatility. Now, obviously, the price of an option contract is going to be affected by the price of the underlying stock. Additionally, it will be affected by how much time is left on the option contract and implied volatility. Does it have earnings coming up? Does it have any major events that people are speculating will really affect the price of that stock and in turn the underlying option? So again, zero-sum game. Really anyone with a few $1,000s and so the tools we provide for you can do this. You can create a passive income and most importantly, get ahead. So that's our Options 101 video. We've got a lot more detailed videos. Just make sure to subscribe and we'll see you in the next one.